You have spent decades working, saving, sacrificing, planning for the day when you could finally stop trading your time for money and start enjoying the life you built. And then you retire. You file for Social Security. You think the hard part is over. But what if I told you that a single rule you have probably never heard of could quietly take $7,200 out of your pocket every single year you are retired? Not once, not twice, every single year. And most retirees never see it coming. This is not a scare tactic. It is not a conspiracy theory about the government hiding money. It is simply a Social Security rule that sits in plain sight, yet somehow escapes the attention of nearly everyone it affects. And by the time most people figure it out, the damage is already done. Today we are going to talk about that rule. We are going to break down exactly how it works, who it hurts, why so many people miss it, and most importantly, what you can do right now to protect your retirement income. If you are new to OG John Hub, this channel focuses on helping Americans understand retirement, Social Security, Medicare, investing, and personal finance in plain English. No complicated jargon, no fake promises, just honest, practical guidance that you can actually use. If you enjoy straightforward retirement and money guidance, subscribe to OG John Hub and turn on notifications so you never miss important updates. Now let us get into the rule that could cost you $7,200 every year. The rule is called the Social Security Earnings Test, and I can already see some of you nodding your heads because you have heard this term before. But let me stop you right there. Most people who have heard of the earnings test do not actually understand how it works, and that misunderstanding is exactly what costs them money. So here is the simplest way to think about it. The earnings test is a rule that applies to people who collect Social Security benefits before reaching their full retirement age while also continuing to work. That is it. If you take early Social Security and you have a job, the earnings test might apply to you. And if it does apply, the Social Security Administration can temporarily withhold some of your benefits based on how much you earn from work. Let me say that again in plain language. You work, you earn money, and because of that work, the government withholds part of your Social Security check, even though you already paid into the system your entire career, even though you already reached the age where you are eligible for benefits, even though you might really need that money to pay your bills. The earnings test does not care about any of that. It looks at your work income and applies a formula. According to publicly available information from the Social Security Administration, here is roughly how the formula works for most people. If you are under your full retirement age for the entire year, the Social Security Administration withholds $1 of your benefits for every $2 you earn above a certain annual limit. That limit changes periodically based on inflation and other factors, so you should always verify the current number on the official Social Security website. But for the sake of understanding the math, let us use realistic numbers. Imagine that annual limit is around $22,000. That means if you earn $22,000 or less from work, the earnings test does not touch your Social Security benefits. But if you earn $32,000, that is $10,000 above the limit. Half of that excess, which is $5,000, would be withheld from your Social Security benefits that year. If you earn $42,000, that is $20,000 above the limit, so $10,000 gets withheld. Now do you see where the $7,200 comes from? $7,200 is roughly $600 per month. That is a significant chunk of the average Social Security benefit for many retirees. And depending on your earnings and your specific situation, the amount withheld could be even higher. But the real pain is not just the number. The real pain is that this withholding happens year after year after year until you reach full retirement age. Consider a hypothetical example. Imagine a retiree who claims Social Security at age 62. That retiree then continues working part-time, earning an extra $15,000 per year above the earnings test limit. In that scenario, the retiree would lose roughly $7,500 of Social Security benefits each year. Over 5 years, that is nearly $38,000. Over the entire period between age 62 and full retirement age, which is typically around 66 or 67 depending on your birth year, the total withheld could easily exceed $40,000 or even $50,000. But here is where the story gets more complicated, and this is the part most retirees completely miss. When Social Security withholds your benefits because of the earnings test, they do not just keep that money forever. Once you reach full retirement age, the Social Security Administration recalculates your benefit amount. They essentially give you credit for the months in which benefits were withheld. That means your monthly benefit could increase slightly for the rest of your life to make up for what you lost earlier. Now you might be thinking, okay, so what is the problem? If I get the money back through higher monthly payments later, why should I worry? That is a fair question, and the answer gets to the heart of why this rule is so painful for real retirees. The problem is cash flow. The problem is timing. The problem is that retirees who need that income at the time they are working cannot wait years to get it back through a small monthly increase. Think about what happens in real life. A retiree takes early Social Security because they need the money to cover basic living expenses. Then they realize inflation is eating away at their purchasing power. So they decide to go back to work, part-time, maybe at a local store, or as a consultant in their former field. That part-time job gives them an extra $1,000 per month. But then the earnings test kicks in and reduces their Social Security check by $500 per month. So their net gain from working is only $500 instead of $1,000. That is discouraging, that is unfair, and that is exactly why so many retirees simply stop working instead of dealing with this rule. But what if you cannot afford to stop working? What if you need every dollar you can earn just to keep up with rising costs? In that situation, the earnings test feels like a punishment for trying to support yourself. And that emotional weight is something financial textbooks rarely talk about. There is another detail most people never hear about. The earnings test applies differently in the year you reach your full retirement age. In that specific year, the withholding changes to $1 for every $3 you earn above a much higher limit. And here is the most important part. The withholding only applies to earnings before the month you reach full retirement age. After that month, you can earn as much as you want, and Social Security will not withhold a single penny. So there is light at the end of the tunnel. You just have to survive the tunnel first. Now I want to talk about who this rule actually affects, because that is where many retirees get confused. The earnings test only applies to wages from work and self-employment income. It does not apply to pensions. It does not apply to investment income like dividends or interest. It does not apply to rental income. It does not apply to withdrawals from your 401k or IRA. It does not apply to money your children or grandchildren give you. It only applies to money you earn from working. This creates a strange situation. A wealthy retiree who lives off investment income can collect full Social Security benefits at age 62 while earning $100,000 per year from dividends and capital gains, and the earnings test never touches them. Meanwhile, a middle-class retiree who works part-time at a grocery store for $25,000 per year could lose a significant portion of their Social Security benefits. Is that fair? Many retirement experts argue it is not. But fair or not, it is the rule. And understanding the rule is the first step to working around it. So why do so many retirees miss this rule? I have thought about this question for a long time, and I believe there are three main reasons. First, most people think of Social Security as a reward for reaching a certain age. They do not think of it as something that interacts with their work income in complex ways. Second, the Social Security statement most people receive does not highlight the earnings test in bold letters. It is buried in the fine print among dozens of other rules and definitions. And third, many financial advisors focus on the big question of when to claim benefits, not on what happens if you work after claiming. Unless you ask a direct question about working in retirement, many advisors simply assume you will stop working completely. But here is the truth. More and more Americans are working in retirement. According to trends that have been widely reported, the percentage of people over age 65 who remain in the workforce has been rising steadily for years. Some people work because they want to stay active and engaged. Others work because they have to. Pensions are disappearing, healthcare costs are rising, and Social Security alone was never designed to replace a full working income for most people. So if you are in that situation, or if you expect to be in that situation, you absolutely must understand the earnings test before you file for benefits. And this brings us to a crucial point. The decision of when to claim Social Security should not be based only on your age or your health or your life expectancy. It should also be based on whether you plan to work. If you know you are going to continue working after age 62, you need to run the numbers. Calculate how much you might earn. Compare that to the earnings test limit. Figure out how much of your Social Security benefit would be withheld. Then decide whether claiming early still makes sense. For some people, claiming early is still the right choice. Maybe you have a health condition that makes waiting risky. Maybe you need the money now and you cannot wait. Maybe your work income is low enough that the earnings test does not affect you much. Those are all valid reasons to claim early. But for other people, waiting until full retirement age or even later might be much smarter. If you plan to earn a significant income from work in your early 60s, the earnings test could wipe out most of the benefit of claiming early. In that case, you might as well delay claiming, let your benefit grow, and avoid the earnings test entirely. There is another strategy that some retirees use. If you are already collecting Social Security and you realize the earnings test is costing you money, you can ask the Social Security Administration to withhold your entire benefit for certain months. Why would anyone do that? because the months in which you receive no benefit still count toward the recalculation at full retirement age. In other words, you can strategically stop your benefits for a while, work and earn as much as you want, and then restart your benefits later at a higher amount. This is a legitimate strategy, but it is complex, and you should absolutely talk to a professional or call the Social Security Administration directly before attempting it. Now I want to address a common fear that prevents many retirees from learning about this rule. Some people worry that if they ask questions about the earnings test, they will trigger some kind of audit or investigation. That is not true. The Social Security Administration is not trying to trap you. They are not hiding benefits from you. They have rules, and they apply those rules consistently. Asking questions is smart. Asking questions is how you protect yourself. The only mistake is staying ignorant. Let me also clear up another misunderstanding. The earnings test is different from the taxation of Social Security benefits. That is a whole other topic. When your benefits are taxed, you still receive the full amount, but you owe income tax on part of it. With the earnings test, the Social Security Administration actually withholds the money before you ever see it. Two different rules, two different outcomes, and both can affect your retirement income significantly. So what should you do with all of this information? I want to give you a practical action plan. Step 1. Find out your full retirement age. This depends on the year you were born. You can find this information on the Social Security Administration's official website in about 30 seconds. Step 2. If you are already receiving Social Security and you are still working, look at your most recent earnings. Are you above the annual limit? If you are not sure, call the Social Security Administration directly. The phone number is on your statement. The people on the phone are generally helpful. They can tell you exactly how much of your benefit might be withheld based on your specific earnings. Step 3. If you are not yet receiving Social Security but you are approaching retirement age, be honest with yourself about your work plans. Do you really plan to stop working completely, or do you think you might take a part-time job, start a small business, or do consulting work? If there is even a chance you will work, factor the earnings test into your claiming decision. Step 4. Remember that the earnings test completely disappears once you reach full retirement age. So if you are close to that age, the pain of the earnings test is temporary. You might decide it is worth claiming early, even with some withholding, because you know the withholding will stop soon. And step 5. Stay informed. Social Security rules change. The earnings test limits are adjusted periodically. Your personal situation changes. What made sense 5 years ago might not make sense today. Review your Social Security strategy at least once a year, especially if you are still working. I also want to say something directly to anyone who feels overwhelmed by all of this. I understand. Social Security is complicated. There are dozens of rules, exceptions within exceptions, and strategies that seem to contradict each other. You are not alone in feeling confused. But here is what I know for sure. Ignorance of the rules is not protection from the rules. The earnings test will apply to you whether you know about it or not. The only question is whether you will be surprised by it or prepared for it. And you are already preparing right now by watching this video. That is something to be proud of. The $7,200 per year that this rule could cost you is not a small amount of money. Over 10 years of retirement, that is $72,000. That is a new car. That is years of property taxes. That is help for a grandchild going to college. That is peace of mind, knowing you have a cushion if something goes wrong. And the difference between losing that money and keeping it often comes down to nothing more than understanding one rule that most retirees never take the time to learn. You have worked too hard to give away thousands of dollars to a rule you did not even know existed. You have sacrificed too much to let a technicality drain your retirement income year after year. The knowledge you have gained today is power, but knowledge without action is just entertainment. So take the next step. Check your full retirement age. Review your work plans. Call the Social Security Administration if you have questions. Make a decision that protects your money and your future. Thank you for spending time with us here on OG John Hub. If you found this helpful, leave a comment below and share it with someone who may benefit from it. Tell us your age or your retirement plans. Tell us if you have ever been surprised by a Social Security rule. Have you worked while collecting benefits? Did the earnings test affect you? Your story might help another viewer avoid the same mistake. And if you have not already, subscribe to OG John Hub so you never miss another important retirement topic. There is so much more to cover. Medicare mistakes, tax traps, withdrawal strategies, investment risks, and every single video is designed to help you keep more of your hard-earned money. Until next time, remember that retirement is not just about how long you live. It is about how well you live. Stay curious, stay informed, and never stop learning the rules of your own retirement.